Welcome to the Alternative Investing Club. My name is Daniel Homland. Today is August 22nd, 2025, and we have a great guest speaker here today. We're waiting just a few minutes for people to come in, and so if you're anxious to get to the talk, skip ahead like 3 or 4 minutes. But as we're waiting for people to come in, does anybody have any topics that they would like to talk about here in the future? I know a couple have been suggested here recently. I actually do have a person who's going to be coming in and speaking to us on litigation finance in the near future. We're probably also going to have a return of our aviation fund come in and present to us again. And so there's a variety of different types of passive investments. And our goal here, of course, is to learn from the best of the best and bring them in as speakers and to learn different passive strategies for investing our funds so that we can grow our wealth together. And in particular, in the Alternative Investing Club Fund, the club fund's goal is to have completely different non-correlated strategies. So we have a position in a debt fund, we have a position in credit validation, and we are looking for a way to get into oil and make that a position as well. And so I'm particularly excited about Troy Eckard and Eckard Enterprises being here today. I'm going to wait a few more minutes here just because we got kind of a small group currently.
That's all right. If it's recorded, they'll get it later.
That's true. That's true. I usually like to hit 50 before we kick it off, but we might kick it off here.
Maybe they're not interested in oil and gas. Maybe they're busy using that suntan lotion with that nice towel all made out of oil and gas and don't realize it.
You know, I know that a lot of people in this group are. You might be right. Summer might be cutting into our numbers here, but I know a lot of people in this group are. Oh, there's a problem with the registration link? Manju, what happened with the registration link? Keisha says there's a problem with the registration link.
Yeah, even though you registered and you get the registered link, if you click the registered link, it is asking to like again register. So then once you again register, then it gets into this meeting.
Are you talking about Zoom's registration page? Because I just use Zoom for registering.
Yeah, Zoom registration. Like if you go Alternative Investment Club, click on that, and when you register, the Zoom will send a link. You use that link for the first time. Yeah, it is giving.
Well, that would be a first time where we have. Is it something that's on my side, or is this a Zoom problem?
I don't know. Yeah, I don't know. Like maybe it looks like a Zoom problem because when you do second time registration, it allows you to get into the meeting.
Hey, if you are in the group right now and you had difficulty registering, can you just put a 1 inside the chat? I want to see how pervasive this is. Okay, that's a pretty immediate response there. I don't know what to say. I guess people are going to see this in the recording. All right. Well, Troy, looks like we are having technical difficulties, and if it's on Zoom's end, there's not much I can do to change it. So we'll kick it off. This will be posted in our club along with all our other meetings. But at this point, I think I'll just hand it off to you. Unless, actually, let's wait for 10 seconds. Does anybody have any topics they want to bring up before we get started? All right, Troy, I'll kick it over to you.
Well, first off, everyone, nothing like this rattles me because like with anything in life, the little nuances or bumps in the road are just what we expect, whether it's market conditions, whether it's politics or anything else going on with life. But the one thing is I'm very grateful each one of you took time out of your Friday to pop in and listen to the topic about domestic oil and gas and what there may be in terms of advantages or opportunities for some of you to consider as maybe an asset class going forward. I always want to make sure you know this is educational in format. I've been invited on to talk about what the oil and gas market looks like, maybe a little bit about our company and what we do from the standpoint of as an energy expert, sharing that with the audience. Everything today is just simply to help you be more aware of what's out there. If you don't mind, I'll go ahead and share my screen if that's okay. And I'll leave plenty of time at the end so we can go through that with regards to any questions and answers at the end All right, let's see if I can get this to work. And if it can, we'll get rocking and rolling.
All right. And I think everybody here knows the drill. If you've got questions, put them in the chat. I will curate them along with any help from anybody else that wants to help me curate them. I just put the question mark next to any chat that's a question.
I wanted to make sure the screen's up before I get started so everybody can see the screen okay?
I can see it.
Okay, perfect. So let me just give a little background on myself and my company. I started out in 1985 as a 20-year-old guy that had an economics and finance background, and I began to work in an investment company in Dallas, Fort Worth that specialized in private, high net worth, high income investors who wanted to get tax write-offs by drilling domestic wells. In 1986, Congress passed the Tax Reform Act that said if you are willing to invest in domestic oil and gas drilling, you're going to get really, really advantageous tax deductions in terms of intangible and tangible write-offs. So think about that. 1986, Congress passes a tax rule in favor of participation in domestic oil and gas. That is still in the books today. That's how relevant and important the IRS and Congress feels this particular tax provision is. But what that has done, it has given the investors in America the ability to have individual participation in oil and gas. The problem is there's not a lot of instructions. There's not a lot of websites. There's not a lot of data that says, okay, I want to do that or I want to investigate it. How does it work? So to your good fortune today, we have the ability to have me explain what we do, how we do it, and do it in a way that may resonate with some of you as to, hey, that's what I'm looking for. I'm looking for passive income. I'm looking for tax deductions. I'm looking for a way to diversify. And then, of course, you can make a decision whether that fits what you want to do. So I'm going to go through the slides, explain a little bit about U.S. domestic exploration today, the oil and gas industry today, and then we'll open it up for questions at the end. So here we go. First and foremost, I think that when you look at any investment asset class, you have to look at leadership. You have to look at who's behind the idea, who's the company or the individual that is going to give you the advice. I don't go to a doctor that just graduated medical school the day before and say, now you can do brain surgery on me. I'd like to know they got some experience and expertise. So having been in the business now going on 41 years, drilling thousands of wells in multiple states and being around for almost 4 decades, I would say that what I've been able to do is accumulate the expertise and experience to be able to talk from a position that very, very few people can speak from. My company is Eckard Enterprises. We own an exploration company, fabrication business, pipeline enterprise. We own producing wells. We own mineral rights. So we're a fully integrated family-run business. My son-in-law is the CEO. My son's the chief operating officer. My other son-in-law runs our CIO. Been a family business since the 1990s. Now, when I look at investments, I don't really listen to somebody talking about an asset class where they have very limited exposure. And I hate to say that because I know there's a lot of new areas like artificial intelligence and a lot of different areas that are brand new. So it's kind of limited on that background of expertise and experience. But in my case, oil and gas exploration has been down for 100 years. And although the concept is the same, technology has dramatically changed our industry, just like it has in automation for cars, artificial intelligence, sending spacecraft to Mars. We now use probably more hardware and software in oil and gas than we've ever used in the history of the industry, and it's making our industry that much safer and more reliable. Our company particularly works in 3 different areas. We work in mineral rights and land and acquisition, meaning we buy, lease oil and gas mineral rights across the United States. We're all domestic. We don't go outside the United States. We have Eckard Midstream, which is our pipeline and transmission part of our business, where we look to buy the pipelines and the facilities that move oil and gas from the wellhead to the refineries and to the producers or to the buyers at the end. And we also have Eckard Energy, which is our exploration company. We drill our own oil and gas wells. We operate them, and we manage right now about 8,500 wells we have an interest in. And this is just called a fully integrated energy company. Very few companies have this integration, but we do. We just crossed 1.1 billion in assets under management, have about 2,500 accredited clients that are million-plus net worth, and we've cash flowed about $200 million out the door in 5 years, and it looks like we'll cash flow about 100 million plus this year in revenue. So the one thing I'll tell you, in any asset class, it's always about understanding the due diligence process. So your due diligence is, 1, showing up today, listening, learning, and understanding. Number 2 is the questions you ask and get answered. And it's just common sense. And I will tell you, having been in the investment world as long as I have and dealing with cycles from 1980s to now, there's a lot about due diligence most people forget. It's really knowing who's behind the asset or the investment opportunity, what the deal, what is it that I'm buying and investing in? How do I understand it? How to get my heads around it, right? It's learning and understanding their strategy, because you may totally hear of a great investment and you listen to the strategy going like, I totally disagree with that strategy. So you don't want to buy a car with square tires. Then you got the economics, which is just, and let's face it, economics are basically based on models, guesses, best guess. Who's got the best guess of forward economics? And of course, risk to reward. What money are you asking me to invest? What kind of profit can I make? And really, what kind of risk level does that inquire? When I think about it, for me, when it comes to Eckard, this is what I would state that Eckard has and provides as somebody who can speak to the energy sector and domestic oil and gas, which is we have the expertise, the experience, the track record, proof of concept, total transparency beyond anybody else's comparison. The terms that we offer and the structures of the deals that we do are beyond compare. They're institutional in style. And of course, direct access. I'll give each one of you my cell phone number. You can call me direct. I am the chairman of the board. I've been doing this 41 years. I believe you as investors need and deserve complete access and treatment as if you were a bank or a private equity, whether you put in $50,000 or $5 million. Your money is your money that you've earned. And when you make an investment, you deserve everything that's on the left side of the screen. All right. The perfect person for being interested in oil and gas, whether it's working instrumentals, has to be an accredited investor. No one without $1 million net worth exclusive of your home and furnishing should be involved in energy. If you want to be in energy and you're not accredited, there's stocks to buy, there's ETFs to buy, there's other ways to get involved. But we look at the 22 million millionaires in this country today, and out of the 22 million millionaires, probably 1 million of them belong in oil and gas, and the other 21 million don't. Why? It's grandmas and inheritance and trust fund babies and people who love stocks and traders, and they want to be in all the crypto. They have no interest in being in the alternative space. And if they are, they don't know how to let go of the steering wheel. They want to drive their investments on a daily basis coming in and out. When you get to the true alt space of stuff like real estate, which oil and gas is real estate, or specifically real estate tied to oil and gas, it's much more of finding the expert, finding the neurosurgeon who knows how to do that surgery with success time and time again, because you're never going to drive that car. You don't have the time or the expertise. Let me just give you an analogy. This is what the oil and gas industry looked like when I started in 1985. The size of a typical oil well drilled in the United States is the size of a paper plate you take to a picnic, 7.5-inch vertical hole. We used to drill wells straight down and cross our fingers, hope the geologist was right, hope the guy drilling the well wasn't drunk on the rig that day and didn't have the drill bit drift off by 500 feet and miss the reservoir. It was like threading a needle. And so when you think about the way the industry was prior to, let's say, 2010, when technology took over, we were running about a 60% dry hole or non-successful exploration effort. This country was running out of oil and gas, which is why oil went to $145 a barrel. So as somebody who raised capital, I'd be on this screen right now and I'd be telling Daniel and his audience, I'd be saying, guys, we're going to put in $1 million and we're going to lose $600,000 just by purely the fact it's dry holes and it's very risky. Well, technology's changed all that. We're no longer shooting in the dark. Now we're using computer-driven chips that are sitting right behind the drill bit, drilling 3, 4, 5 miles in the ground, using triangulation with satellites and robotics to drill the well, and 15 engineers looking at a computer screen in Dallas, Denver, Houston, and they're all looking at the same time. It's real-time feedback, something that was not even fathomable even 10, 15 years ago. So now we look at today's oil and gas exploration efforts, and now we have something totally different. Because of technology and the engineers and the software and the hardware that we use, we're now drilling in basins, buried Grand Canyons, that are about 9 of them around the United States. And these buried Grand Canyons are loaded with some of the greatest content of organic material, dead plants and animals, which is what oil and gas turns into. And now the question is, I don't need a 7.5-inch paper plate. I need to know where the basin is. I need to know how thick it is. I know every time I drill a well, I'm going to make a well. Now what I want is I want a Formula One pit crew. I want the best engineer, the best drilling superintendent. I want to hire the best intellectual assets so I can drill that well for the lowest price at the most rapid pace, stay in the reservoir of expectation the longest, and do it with the greatest economics. I'm not worried about dry holes anymore. From now, the oil and gas industry is not worried about dry holes. We're worried about performance. Who's the best jockey in the race? So this is all about best in class. And I think what really makes me excited the last 15 years is I don't drill dry holes. Every well is going to make me money. It's just a question which one's the thoroughbred that wins the Kentucky Derby and which one comes in 6th place. That's a nice position to be in when you're talking about production for oil and gas. When you think about the way oil and gas works, I want you to think in real estate terms. So you're in Portland, you're in LA, you're in Dallas. Everybody looks at the surface real estate, residential development, self-storage, multifamily. We all get that. We can see it. The problem with oil and gas and mineral rights, it's all about the real estate below the ground. So everybody needs to know in the United States, you get three rights. You get the rights come with the actual acquisition of the land back in the land grant days. I got the surface, I got air rights, and I got mineral rights. Most people have no clue they can be separated and sold separately and deeded and titled. Most people don't know that you can actually lease all three separate, leased and titled. What is really important is, though, only a certain part of the 2.2 billion acres in the United States, only a certain number of acres have oil and gas underneath it. It's about 200 million acres. So in order to power this country's energy internally, we know there's a finite number of areas that contain natural resources for oil and gas that can be drilled and exploited. It makes that 200 million acres the most valuable energy mineral acres in all of the United States. So you know where it's at, you understand who's going to develop it, you understand the technology behind it. Now, how do I participate as an investor to own it? How do I participate in the financial benefits of it? Well, that's where Eckard Enterprises comes into hand. So what we do is we say, look, our company offers a 40-year level of expertise and experience. When you take a look at the gray polygons on the right-hand side, all that gray and the majority of that tan that you see on the right-hand side did not exist 15 years ago. We did not have the technology to drill into a buried Grand Canyon. The rock formation is hard as wet concrete. We knew it was loaded with oil and gas. We simply didn't know how to get it out. We'll do the horizontal drilling, frac stimulation, and all the process that we've learned over the last 15 years. We went from being almost out of oil to now we're the #1 oil producer in the world. We did that in 15 years or less. Today, you've got very finite areas, mostly where you see the tan, that are defined as the shale basins that supply all the oil and gas for the United States. There is some older fields, there's some vertical fields, but let's just say as the transition has taken place, if I had to say what the barrier to entry is, how do I buy, own, and participate in oil and gas in the areas defined by the tan? That's going to be the specific tier 1 greatest assets there are. Well, Eckard's figured out how to do it. We've been doing it every day. We're experts at it, and we're leading the industry in it. Now, when you think about different ways you can invest in the energy space, you can go to the public markets, as I mentioned before. You can buy bonds of publicly traded companies, or you can do one of two things, in my view. You can say, look, I like real estate, but I don't like surprises. I just want to buy a piece of real estate. I want to be a passive owner, and I just want checks every month. I want passive income. Well, if that's true, you're going to want to buy the mineral rights. You're going to want to go in and participate in owning the actual mineral right. These billion-dollar oil companies like Exxon and Chevron and Conoco have leased them. They're going to spend all the money to drill and develop the wells on your mineral rights. And by virtue of the lease agreement, they have to pay you a royalty income percentage of all the oil and gas sold every single month, every 30 days, or it nullifies the actual lease agreement. So whether they file bankruptcy, whether oil is $100 a barrel, $5 a barrel, every month, 20 to 22% average of all the revenue they generate, we as mineral owners get for free. They drill 1 well, 5 wells, 50 wells, 100 wells, 2,000 feet deep, 20,000 feet deep, we don't care. All we know is whatever natural resource they pull out of the ground, we get paid without any expenses or obligation. So that's one investment. Just be a mineral right. It's not like being the owner of the casino. I get paid every day, all day. I don't care what blackjack game you're playing or craps. When I get to the point of saying, well, that's one aspect, and I want to put a lot of money, that can be done with a self-directed IRA. You can invest in mineral rights through your 1031 tax exchange because it's like-kind exchange, real estate for real estate. It offers a 15% of the income tax-free. I love mineral rights. So Troy Eckard's personal portfolio is probably 70+% of my portfolio is in mineral rights because I just get checks every day. All I do is wear my hand out, put my stamp on the back of the check so I deposit it. That's a great hobby to have, stamping checks you get to cash without any obligation. Then you get to the next part, which is, okay, well, why does Exxon and Chevron and Conoco and why does Diamondback, why do these major multi-billion-dollar companies, well, then why do they drill? Why don't they just own the mineral rights? Well, because the mineral right owner owns about 20% of the ownership. The people who drill the wells get 80%. So if you're really good at drilling and you're like a general contractor, you're used to going vertical. I mean, we own the land and somebody wants to build a Home Depot or Target. Well, that would be the oil company. They want to go develop the land. They want to spend the money and the time and the capital to drill wells at $10 million per well, but they get to keep 80% of the ownership and the revenue from whatever's discovered. So they want all of it. They want as much as they can get. But there is a chance for each one of us as individuals to participate in the same type of participation in drilling wells. It's called working interest. The words define what it is. It's an interest in a well. Your capital's working. You're paying your pro rata share to drill, complete, and turn the well to production. And we can buy a small piece of 1% all the way up to 100% of a well. If you find the right sponsor or the right company, you can literally drill almost exactly at the same terms as Exxon or Chevron or Diamondback or other major public companies. There are 50 to 100 oil and gas sponsors in the marketplace today. The biggest issue is, if you want to participate in a well, is how do I know I'm getting a fair transaction? How do I know the person offering it's competent? How do I know they're ethical? How do I know they have the integrity or the intellectual understanding of the complexity of the business? I can assure you right now, 90+% of the people offering oil and gas working interest probably started about less than 3 years ago, and they all jumped in when President Trump said, drill, baby, drill. Somebody was selling multifamily last year, now thinks they're an oil and gas expert. You won't know. You write a check. You paid 4 times the cost of the well. You have a dry hole as soon as you wrote your check. So understanding working interest, that means I want to be in the well. I want 80% of the revenue. And that's a great thing to have, because guess what? When you do participate in working interest, there's 2 reasons you do it. Number one, the one big beautiful bill just passed by President Trump in Congress, right? Based on his bill, allows you 100% tax write-off this year. I make $1 million in W-2 income. I don't want to pay 37% in taxes. I decide to put in $200,000 in drilling. The minute I write my check for $200,000 in a working interest program, I can tell my CPA, I just reduced my $1 million W-2 income down to $800,000 because of the tax rules that are in place. They started with that 1986 tax reform law, but now because the OBB, it accelerated that with bonus depreciation, saying when you drill a domestic well, you get to write the whole thing off your gross income. Big economic advantage. But really, it's about substantial profits. This is what I want everybody listening today to remember. Mineral rights are all about monthly cash flow. Working interest is cash flow, but you get huge tax advantages, but it's always about making profit. So a dry hole gets the same tax write-offs as a successful well. I want everyone to know, when you do working interest, focus on the success and the track record of who you're investing with. Can they demonstrate they successfully find good wells that generate great returns? It's about making money. I also want you to think about this. The wells we drill today have an economic life of 20 to 75 years, paying monthly distributions for 20 to 75 years. The old vertical wells, I'd be lucky to get 7 years of life. They were like a 16-ounce Coke. We drill them and they'd be dry in 7 years. So we were running on a treadmill. Today, it's like a 3-liter Coke. And we drill a horizontal well and it comes out and we get, 20, 30% of the reserves in the first 5 years, make our money back. But then that thing declines, but it declines over the next 25 to 75 years. So I'm getting a check every month for a quarter of a century. What a much better change in economic advantage. Plus, I'm hitting 98% of the wells I drill. I'm not getting 60% dry holes. I'm getting 98% successful wells. That's a massive change from an investor standpoint on the value proposition for looking at oil and gas as an investment. When I think about the math, it's simple. For every $100,000 I invest in working interest, I'm going to write it off. If I'm in the 37% tax bracket, I'm saving $37,000 in taxes. So what I really want to point out is that the government, the IRS, the OBB said oil and gas is so important to our economy. We want to reward those W-2 income earners with the ability to invest in the energy space in the United States and reward them with these huge tax benefits. 15% of our income is tax-free. There's so much advantages. You stop back and say, well, why is that? Because we consume about 21.6 million barrels a day, but we only produce 13.2 million. We can only refine about 8.5 of the 13.2 million that we produce. So we're actually bringing in about 13 or 14 million barrels a day from other countries that we import because we either don't have the ability to produce it or we can't refine it. So Congress, the IRS, everybody wants us to drill and participate in domestic exploration, and a lower energy cost makes our economy grow. That's why President Trump wants us to drill, baby, drill. And he wants oil prices $65 a barrel. He's giving huge tax breaks because he wants us to drill for our own national security, for our own economy. So our track record, again, this is what we've been drilling in the last 5 or 6 years in these horizontal wells. We're averaging about 94% return in 24 distributions, meaning once you invest, we put the wells online, 24 months of production, we're generating about a 94% return. But that's cash on cash. If you really think about it, we only have to get back 63% because you save 37% in taxes. I don't like using the tax consideration. I like to make money. So thank you for the tax benefit. I'll count that as a nice asparagus on the side of my ribeye steak. The ribeye is I want to put $1 million in and get $1 million back, and the tax is just added fluff on top of my economic success. When I go through our personal track record, we have a rate of return of 40.54% on 6-month average, meaning wells that have been on for 6 months have over 40% return in 6 months. You go to 12 months, we're at 55%. You go to 18, we're at 79%. Oil wells are like that 3-liter Coke. When you open them up, man, they're coming on strong and hard, and they decline rather rapidly. I don't care. If I can make all my money back in 48 months, and I have an income-producing asset that's going to last 25 to 75 years, just like Exxon, how many wells can I drill? How fast can I drill them? If you take a culmination of what happens in drilling, for those of you that want to know what should happen, whether you invest with 20 other oil companies or Eckard or anybody else, you got to look at everyone gets the same benefit by saying tax deductions apply to everybody. The tax-free income of 15% of your income being tax-free applies to everybody. You should get monthly distribution because I'm getting paid every month. You should get paid every month. Behind that well in the ground, not just the cash flow, is the proved reserves. Because once I drill the well, now I can book those as proved reserves. And I got an economic life of wells that are going to last decades. So we look at 2 years of a 93.97% return. That means once I get that next check and I'm break even, everything after that is complete profit, not even counting the tax benefit. As an example, just as a hypothetical, if somebody were to invest $250,000 in working interest and they did that over 5 years, you'd have $1.25 million invested. If I reinvest the income off the wells from year 1, 2, 3, 4, and 5, I end up with about $3 million invested at the end of 5 years. But I got $6 million worth of reserves in the ground. This is why Exxon bought out Pioneer for $60 billion. This is why ConocoPhillips bought out Marathon, right? What's happened is the oil companies are buying not only cash flow, but they're buying billions, if not trillions of dollars of reserves in the ground that are proved and producing. Never before in my career have I ever seen the ability for individuals like you and I to participate at the same level as major oil companies, have the same ability for the same kind of cash returns, and be able to see a runway of future opportunity that could be 10 to 20 years in the making. We truly have an open window for private investors to invest today that have never done it before. It takes about 12 to 14 months. This is the timeline. By the time we get our funds, drill the well, frack it, put it online, get the revenue, it takes about 12 to 14 months. But after that, your revenue comes every single month. Just as a reminder of key points, oil and gas is about tax deductions, tax-free income, multi-well opportunities, diversification, drilling side by side with the best billion-dollar oil companies in the world, owning minerals under the best billion-dollar oil companies in the world, limitation on liability because of the way things are structured. And of course, it's all about you deciding that energy is someplace you want to be. The advantage to our company is simple. Been around for 4 decades, 40 years. I'm the most proactive, hands-on, transparent chairman of the board you'll ever find. My cell phone number I'll put on the screen. Why do I do this? I was in Buffalo, New York last night. 30 physicians in the room. Guy raised his hand and said, if you can go to private equity, Wall Street, you've got $1 billion of capital, why don't you just go to private equity and ask them for $500 million? I said, because I don't work for free. I don't want some guy in New York with a suit and tie that polishes his fingernails for lunch to tell me how to drill a well. They wouldn't know which way a drill bit turned. I offer 40 years of experience. And what I really like to do, I like relationships. I like to know my partners. I like to know who I'm working for. I love the success that we're generating. I've done it for 4 decades. I'm 61 years old. I'm healthy as a horse. And for me, the satisfaction of putting a plan together, executing on that plan, and delivering the results to investors and partners like Daniel and the rest of you on the screen, that's what drives me. I love what I do. But we offer you direct ownership. No one else does. They put you in partnerships and LLCs. You're watered down. You're feed to death, right? When you talk about what kind of integration Eckard has, we own a fabrication company. We make our own steel tanks. We have our own pipeline company. We have our own mineral rights. We have our own exploration. We have a full staff here, engineers, geologists, landmen, accountants. We're a fully integrated family-run business. So when I think about all these attributes on the left-hand side, there's no other company that offers any of this to you as a private investor. They just don't. So you have a real choice. Your choice is, do you want green envelopes? That's what our trademark is. We send out revenue every month in green envelopes. Our clients notices the green envelope company, right? The self-directed IRA custodians that manage your retirement money, they go, we get every month, we get boxes of Eckard's green envelopes. Nobody else sends out money like Eckard. We just hit about almost 190 million in distributions. We'll send out about another 30 to 40 million this year. Next year, I think our cash flow out the door will be about 100 to 125 million out to our investors. So it's your choice, your life. You can simply do what you're doing. You can invest in energy through public stocks, or you can say, you know what, I want to get educated. How do you get educated? What you have to do is you got to go to eckardenterprises.com. In that particular website, websites are websites. They all say the same thing, who we are, about us, all that kind of nonsense. But we've done something quite unique. We are the unicorn in the energy space. We created an application called Eckard Insights. You sign up. You don't have to tell us your social security. You don't have to tell us your net worth. You can sign up and just say, I just want to know how it works. We got hundreds of hours of videos because I believe the more educated investor and partner you are in oil and gas, the smarter you are, the more likely you're going to invest with our company, the more likely you're going to be very successful in the energy space. So we spent several $1,000,000 in about 5 years developing Eckard Insights. You can literally, once you invest with us, if you decide to invest with us, you can pull up your wells anywhere in the world 24 hours a day and find out what your wells produced the last night, how much they went through the tax office. You can get your deeds, your title, your revenue. We took it to a modern level of alternative asset investment information and transparency and communication that no one else has ever offered. So that's pretty much what I have. I'm sure there's going to be some questions from that. And all you have to do is go to eckardenterprise.com and sign up, and you're ready to go. And if you don't sign up, my cell phone number is 469-422-1781. I pretty much answer calls from 5:30 in the morning to midnight. I believe sleeping is a waste of time, so I don't do much of it. All right, Daniel, back to you if there's any questions.
All right, we definitely have some questions, and I'm going to interject some of my own here as well. But first, I see your question. I usually take them in the order that they come in. So I see your question, William, but I'm going to skip to Ains' question first. And he says last year, about 80% of the investment was tax deductible. Has this changed for 2025? And I'm going to put a modifier on that question here. Can you explain to us, kind of give us an overview of the tax advantages of working interest versus mineral rights and how they differ? And then the 15% that you mentioned there, I'm assuming that's depletion allowance?
Yeah, so let's take it by bite size.
Okay.
So a well drilled back vertically 15 years ago, about 65% of that well's cost was in the actual drilling of the well. So the IRS said, look, if you're going to drill a well, we're going to split the investment into two different types of categories. One is intangible, the labor, the cost, actually drilling the well. There's no residual value when you're done. So you get to write that off in year one. The leasehold cost, which is land or real estate, and the equipment, the pipe, the tanks, the wellhead, well, you get to deplete it or you get to depreciate it over 5 to 7 years. So the old days, you kind of had a 70-30 split, 70% deduction first year, the other 30% you depleted or depreciated over 5 to 7 years. Horizontal drilling is different. When we drill a well, it's going to be drilled and completed because we know we're going to make a well. So now you have 100% of the money that you're investing in a well is going to be utilized. So what has happened is President Trump in his first term came up with his 2017 tax revisions, which caused that bonus depreciation. And he said, look, we're going to accelerate every part of participating in a well. All of it is going to be treated as a tax deductible item the first year. So that kind of went away over the 5-year period of Trump's first crack at this. And then the one big beautiful bill that was passed 3 weeks ago now says now it's permanent. Now it's part of the tax. If you participate in a well, 100% leasehold, equipment, pipe, the drilling, it's all deductible first year. No other asset class has this kind of deduction. Why? He needs domestic exploration to make his economy boom like he wants it to accumulate, right? The 15% tax-free income is exactly what you said. It's depletion allowance. We have a reservoir. What we pull out is never going to be there again. Oil and gas is the only natural resource on the planet that when you burn that barrel of oil, it's never going to be on planet Earth again. So because of that, and we're depleting it, they say, look, you make $1 million, you're going to pay tax on $850,000. 15% is not taxable. Well, that just increases my yield, increases my rate of return, and it's another benefit of investing in oil and gas. But that is what they've structured under this OBB and this accelerated tax deduction.
All right. And Manju actually has a follow-up question, and he's saying which are the ways that W-2 taxes can be deducted, and I'll follow on to that. If you're not deducting W-2, what types of income are you offsetting?
Yeah, so I think what you have to remember is the IRS clearly tells you what they want you to do. They give you, Congress gives the IRS instruction, says, we want you to go drill, so we're going to give you a tax deduction. So we all run over and go drill wells because we want to save taxes, and that's the direction they're pushing us in, right? The key thing to remember is the word deduction. What does the IRS mean by tax deduction? Well, the way you're going to get a deduction is you have to have a loss, right? So I don't like the word loss because the way we drill is we want to make money. So I refer to working interest today as a tax deferral. Now, the IRS can give me the deduction, but I'm only deferring the tax because I fully expect my well to pay me out in 24 to 36 months. So I'm not drilling dry holes. Now, 15 years ago, 60% was dry holes, so I needed that deduction. Today, I want to put in my money today, take that deduction the IRS gives me. But to me, I know I'm going to be paying income tax over the next 3 years as I make all my money back on that 1099 income. So if you have active income, whether it be W-2 or in other forms of active income, you're going to want to drill wells. You don't want to take passive income because you need to have a passive loss. We don't generate passive income or passive losses by drilling. It's all active. It's subject to self-employment tax, right? Now, on the flip side, mineral rights don't have any tax deduction. Why not? There's no losses. It's real estate. It's like owning a lot, an empty lot with no house or any vertical improvement. I own the land. It's there. It's never going to go away. So you would almost find it impossible to go to a zero value on a mineral right. So therefore, the IRS goes, you're not going to lose money in mineral rights. I'm not going to give you deduction. But I know you're depleting your reserves, so I will give you 15% of your income tax free. So with mineral rights, I get 12 checks and a 1099, no capital calls, no expenses, no holding costs. Beautiful investment. I love it. Working interest, not only do I get that tax deduction up front, but each month I get my revenue, like any other type of real estate. I got to pay the pumper, the gauger, the insurance, the cost of moving the oil. So I have a gross check, a net check, and expenses in between. My net check is active income from oil and gas working interest participation. So I get to take my W-2 income or my active income, federal reported income, to drill the wells. The income it generates is more active income. And I love when my investors say this, man, I'm trying to get rid of income. I don't know about you, but I want to catch Elon Musk. Troy's goal is Elon Musk. I want to have all the active income I can get. And all I want financial tools to minimize the tax obligation by letting me use the money to make myself wealthier and create more income. And I'll pay those taxes if and when the IRS wants that money down the road. My goal in life is to die and my wife's new boyfriend has to spend all my money on my play toys when I'm dead. But right now I'm going to keep it for myself.
All right. You mentioned a little bit earlier, and I took note of this. It went by kind of quickly that a new oil well is like popping the top on a 3-liter Coke. And first of all, I wanted to say, do you really have everything must be bigger in Texas? Because I've only seen 2-liter Cokes around. But tell us a little bit about that. What does the income curve look like on one of these investments?
So what happened for us is when you drilled a 7.5-inch vertical well, think about a paper plate at a picnic. You went straight down. Well, maybe the reservoir at that time covered 300 acres, half of a square mile. Well, the only way for that oil and gas to be produced to the surface, it all had to migrate to that 7.5-inch hole like a periscope on a submarine, right? Well, what we decided as an industry is we had these huge buried Grand Canyons, but the rock didn't flow. It was like wet concrete, full of oil and gas, no porosity, no permeability, not enough pore space, and nothing connected. So by drilling that well and turning it a 90-degree angle, if you went out, let's say a mile, now you have 4,000 feet of a 7.5-inch periscope in that reservoir. That was the equivalent of like 200 to 400 vertical wells. Okay, great. We have 200 to 400 times more exposure, but we still can't get it to flow other than what's immediately connected to that wellbore path. So George Mitchell, the guy who discovered all the shale and horizontal drilling, said, all right, how would I get water in my driveway on a concrete driveway? How would I get it to flow? I spray water on it, but it's still not flowing. Well, what if I took a jackhammer and I went right down the middle and I jackhammered a pathway like a wellbore going out 4,000 feet, and all of a sudden the lower pressure point would cause that migration of that fluid and water to those cracks. So he went in and he injected sand, cracked the formation. Those cracks stayed open, and those molecules, because of the weight of the earth pushed down, now all of a sudden you went from 20 barrels a day in a vertical well to 100 barrels a day from a well not fracked to now you have a well doing 1,000 barrels a day because it was fracked. Now, here's where the decline curve comes in. So the oil company said, we could drill a vertical well for 1.5 million. We drill a well horizontally not fracked or a very small frack for 3.5 million. But if we go dump in 20 million pounds of sand and 500,000 barrels of water and we shatter the formation, now we can get a well coming in at 1,000 barrels a day. And guess what? That well might have 500,000 to 1 million barrels of oil in a single well. Okay, that's what's going to work. But now we have to recognize that the capital we put in is a lot more expensive, a lot more capital, not $1.5 million well. Now these are $8.5 to $10 million wells. but I'm getting that money back in as little. I just drilled 5 or 6 wells in North Dakota. This is a true story. I just drilled like 5 or 6 wells that came online back in February. They've already paid out in 5 months. I've already checked for 300 grand. When I get my first 2 checks, I'm totally paid out in 5 months. Where in the world can you put in $100 million like an oil company and know that 6, 8, 12 months after they're online, you recover your money? So that's why I use the 3 liter Coke with the big old orifice on the side, the orifice on the top. We used to take 16-ounce Cokes, pop the top off, and when it fizzed, 75% of the Coke was on the ground. That left us this much left. Today, it's the opposite. We frack that zone, we overpressurize it. It's 3,000 pounds per square inch. We get it up to 3,300 pounds per square inch. It kicks out a lot of oil in the first 24 months, but it's only 15, 20, 25% of the total reserves in place. But that's enough for us to recover our money. So it's an extremely fast rotation of capital, extremely high success rate. But when we're done, we're left with this huge amount of reserves in the ground. But now we have this nice slow depletion over 25 or 30 years. So started 1,000. After 4 years, I'm down to 150, 200 barrels, but I made all my money back. But now it's going to do 150 barrels. And in 25 years now, it gets down to 5 barrels a day. It's pure profit. So that's kind of how it works. And I'm going to send you a 3 liter Coke, by the way.
I'm looking forward to seeing that. I got to Google a picture of that.
Coming your direction.
So there was a question. I think you answered most of William's question here, but I want to expand a little bit more on the technology to talk about acquisition. How do you go about finding your oil well drilling sites, and is it the technology that lets you know for certain that there's oil there? How do you know there's going to be oil where you drill?
Well, so think about the geological aspect of energy, right? So we're looking for dead plants and animals. So the best analogy I give my partners, I said, when I drive from Phoenix, Arizona, south to Tucson, it's all desert floor. But on either side of that desert floor are mountain ranges. What we used to do was use 2D seismic to identify the top of a mountain range because the oil and gas molecules would migrate to the highest point because the weight of the earth was pushing down. Okay. So that's what we did for 100 years. Well, if you get in a helicopter and you try to take a 7.5-inch paper plate and spiral down a mile, you might have to be on the total apex of the mountain to get the drainage from what's inside that mountain. If you're off by 100 feet, you missed it. So hell, it was like throwing darts in the dark, right? Well, then all of a sudden, George Mitchell starts looking at drilling. He says, every time we're drilling down for that zone at 10,000 feet, we're passing through this really thick shale zone, and that shale covers 40 million acres. I mean, I can drive 400 miles north of Oklahoma City and 200 miles south, and every time I drill a well to 7,000 feet, I got this huge shale deposit. It has a lot of organic material. We took a core sample like core and concrete. We went to the lab, and it goes, this is the most fossil fuel, organic rich rock we've ever found. It's loaded, but it won't flow. So that's when George said, okay, I know where the oil and gas is. I know where the greatest deposit of organic material was at that geological time frame. So I know it covers 40 million acres. You and I, Daniel, could walk to the edge of the Grand Canyon, throw a rock in, we're always going to hit the Grand Canyon. So I'm not worried about oil being there. Now it's, how do I get it out in economic quantity? We couldn't have done that at $30 a barrel. We couldn't have done it at $20 a barrel. But at $45 to $60 a barrel, now there's enough profit to be able to justify drilling horizontally and fracking it. So it was a matter of economics and technology. But here's what I think the game changer was for a company like mine. 20 years ago, Exxon would drill a well a half a mile from me, and I knew they had a good well because I'd pay a guy to sit outside on the public road with binoculars and count how much pipe he had in the rack. And I go, I know Exxon just drilled that to about 9,000 feet. I'd look at my 3D size and my geology. He goes, it means they're in this zone. Well, if they're in that zone and it's successful because I can see them completing it, that means I see the same zone. There's a good chance my well has the same zone as Exxon. That means I have a good chance of making a well. It was so prehistoric, it was ridiculous, right? Today, that's different. What happened is about 15 years ago, because of the internet, all these companies went out and they created software and they created subscription sites. They said, we went to every courthouse in the United States and we scraped all the data from all these oil companies for 100 years. I can tell you every well Exxon drilled back to the 1910s. I can tell you what Exxon drilled right next door because they have to report it because it's a permit, it's an application, you're in a reservoir, the environmental agency wants to know what's going on. So now today, fast forward to 2025, we have subscription sites. Blackstone just paid $4.6 billion for a company called Enverus. Enverus has every data on every well in the US. We subscribe to it. It costs us a couple $100,000 a year. But I can tell you every well, the history of well, how they complete it, what it drilled, the size of pipe. We didn't have that 15 years ago. We were like, hell, I have no idea what they're doing next door. So if you're really good at technology and you hire the right people on board, We were able to elevate ourselves from a private small family business. Now we're competing toe to toe with billion-dollar oil companies because we have the tools to do it. The problem is, it's like giving dynamite to a 3-year-old, right? They might have a dynamite that might be able to light it, but they're going to blow their hand off. So having Inveris, having these subscription sites is worthless if you don't have the experience and expertise and you don't create the team. What we did was we created a phenomenal team. How did we do that? When Exxon bought out Pioneer for $60 billion 2 years ago, they looked at the 150,000 employees of Pioneer and said, you guys are great people. Here's your 6 months worth of severance, and we don't need you. We just want your oil and gas assets. So with $250 billion in mergers, some of the smartest people, engineers, geologists, production, accounting, don't have jobs. So we said, oh, it's a great time for us to go hire people we could never hire and put them on our team. So we just hired people that used to work for Diamondback and Exxon and some of the majors. They now work for Eckard. We created a 5-star gold medal team because there was a huge surplus of really skilled people in the intellectual market. Now I give that skill set and I say, here's all the software, here's all the subscription sites. And they go, oh yeah, we've already done that. I spent $1 billion with Diamondback last year. Our geologist worked for Diamondback as their lead geologist with $1 billion budget. That's who I have hired. He looks at the data and goes, this is exactly what I was doing for 10 years. So because of that, we've been able to elevate ourselves to what I believe to be an equal industry player along with the majors. That was not available till technology came about in software. I could literally send you a link right now, Daniel, you and your audience. We're drilling a well in Oklahoma right now. I could send you a link and you could literally watch the drill bit in real time. Every foot, every inch, 24 hours a day, you get to watch that well drilling. Now, why is that important? In the old days, when you drilled a well, you had to count how many 30-foot pipe lengths you had in the well. You estimated where you're at in the zone. You waited for 15 to 30 minutes for the rocks that were cut to come to the surface, come out in the shell shaker of the surface, take that, put it underneath the microscope and go, okay, we're in sand. Today, we know exactly what we're drilling through because it's real time by electronic current through the fluid right to the computers. People in Dallas, Austin, Houston can look at that real time. We're using satellites. So it went from being like the movie There Will Be Blood, where you're digging a hole with a shovel, to now it's just as sophisticated as NASA or any other technology-driven industry. It's a game changer, which now makes it completely successful and viable for high net worth investors today like never before. I just happen to be smart enough and experienced enough to know that change took place 8 years ago. I shifted my company. I made the change. And today you have Eckard Enterprise at 1.1 billion and 8,500 wells. And now we're a major player in the Anadarko Basin, Oklahoma, North Dakota, as well as the Permian Basin, West Texas.
All right, we've got a couple financial questions here.
Sure.
And here's a really quick one. Most of the people in this group are real estate investors. You know, It's kind of our bread and butter here. Lucas is asking about what's the IRR and equity multiple. Do you even what are the terms that you use in order to describe your returns? I assume they're not the same.
So let's talk about equity multiple. So everybody in real estate,
we've got 3 other good questions to do in the next 9 minutes too.
I'll make it quick.
Okay.
The way oil and gas works is that you have a declining asset. So you don't know if you would necessarily have an equity multiple. For us, it's about, I put $1 in, how quick can I get the dollar back, right? Once the dollar's back, what am I left with? So if I put in $1 million and I can get it back in 24, 36, 48 months, you can calculate whatever return on investment it is, but what's left in the ground, improved reserves. The other thing is, unlike real estate, when we drill a well or two, that might be 1 or 2 wells, but that property has infilled. Think about a big box development. You know, Home Depot takes the corner, that's the first well. Chick-fil-A takes a small lot, that's the second well. But I have another 42 locations that I can go drill and produce over the next 10 or 20 years. Typically, whenever we sell minerals, we're selling it based on cash flow and future locations. So I could buy minerals for $1 million, cash flow it at 15% a year, and I might not sell it for 1.5, 2.5 times what I paid for it. Depends on the market. Working interest is different. It's finite. It's limited to a single well bore. So it's the cash flow that I've already generated, the remaining calculated reserves left by the petroleum engineer. Whoever buys it's going to discount it for a net present value of like 12, 13%, and that's my cash flow value. I can 1031 that back into traditional real estate. So we do it based off annualized rate of return, cash in the hand, and remaining reserves in the ground. And that changes dramatically based on commodity prices and timing. Second question.
Yeah, I think you actually may have answered 2 of the 3 questions there. I'm going to jump to the third one really quickly because you just briefly touched on it. 1031 exchanges. Are they typically
100%.
the same as real estate, right?
I have clients selling. I had a client last year sold $6 million commercial building, put it all in mineral rights, had cash flow within 90 days. You can sell rent
Oh, it's a
houses.
nice
You can,
strategy.
as long as it's owned by you, not in a partnership, and we don't do partnerships, you have direct ownership. It's like kind exchange. Now,
Yep.
working interest, you don't want to do a 1031 into working interest, even though it's allowed. I don't want to take profit and put it into a declining tax write-off well. I'd much rather drill the well and then sell it in 3 years under a 1031, put it back into minerals or go back into real estate. So you have self-directed IRAs, great for investing in minerals, not in working interest. 1031s are great for minerals, not so much for working interest. Sell your working interest, go right back into minerals. Pipelines generate passive income. So each one of these are just a great set of nuances. Now, let me give your audience a real kicker that our clients discovered about 6 years ago. I didn't do it, they did. They're smarter than me. They said, if I take $1 million out of my self-directed IRA and I buy mineral rights, I'm buying it at market value, production plus future locations. But if I go to a third-party appraiser and they follow the IRS code and the SEC code and they say, what's the actual book value of those minerals, they're coming in between 40 and 70% reduction from the market value. So a guy puts in $1 million, he goes and gets the appraisal, he says, now that million's only worth 400,000. They're converting it to their Roth IRA at 400,000. They just save taxes on 600,000. It's massive. I had no idea that was there. One of my engineer clients figured it out. Now everybody does that, and the reports are, it will stand up to any kind of IRS audit. We have a list of
Yeah,
those people. We don't interfere, but it's completely at arm's length. So it's a great tool, great way to save taxes inside of your IRA.
that's interesting. We had about a month ago somebody on who had a very similar strategy for buying buildings and doing the same sort of IRA
I would not ever touch a
strategy.
DST. I'm going to make this there.
Yeah,
Don't ever do a DST for your stuff. It's a waste of money. Go ahead.
I agree with you there. Um, what? Oh, okay. When you're, what's the minimum investment for your funds?
We don't have a fund. Everything's direct
Okay,
ownership. So each mineral portfolio, we look for a minimum of $25,000 investment per portfolio. When it comes to drilling, we're looking for roughly $50,000 minimum commitment for drilling, and usually they come in 5 well packages. Some of our bigger portfolios are 100 or $250,000 minimum just because of the size. Maybe it's a $100 million mineral portfolio. But to be candid with you, Daniel, here's the way it works. If you're going to put in 25,000 or 50,000, put your toe in the water, go buy public stocks. We're looking for somebody who wants to build a cornerstone of their portfolio by having energy as one of those key assets. So what we're looking for, our average investor across 2,500 investors is about $600,000 investment. So if I took everybody averaged out, it's about 600,000. Now they don't put it all in day one. They may say, look, I'll do 25,000 a month in minerals. I'll drill at the end of the year for tax write-off, or maybe they're heavier into drilling. But we as a company have a limited bandwidth, and we want people who are more serious about energy. If you like
absolutely.
energy but you're not serious, go do public funds. It's a lot better to do it that way.
Okay, okay. And I think that actually does answer the question here. When I'm making Ain is asking, when I'm making an investment, am I investing in a particular well, or do you have a set of wells? And how can I
Everything
mitigate
we do is in
risk?
wells. Everything we do is in wells. So let's just take,
Okay,
I have 3 mineral packages right now that are open. If I put 25,000 each one, that's 75,000. You'd have 143 wells. You'd have 92 producing, another 50 that are being drilled and turned on. That particular mineral package starts cash flowing probably as early as October, and you start getting checks in October, and you'll get 2 checks and a 1099, and now they're going to produce for 25 years. That
right,
particular 3 portfolios, though, when you're done in about 10 years, we'll probably add another 80 to 150 wells. So we're basically buying a pen of pregnant rabbits. So the key is we never buy anything that's not cash flowing from day one. We never buy anything where we're betting with a terminal value. A certain high allocation goes to one asset. We don't want terminal failure. So we diversify in geography, we diversify in oil companies, we diversify in oil and gas. We bundle that and say, here's a portfolio. Today we have 3 portfolios open with about $2.5 million left in each one. I'd say you put 25 in each one. Now you have 143 wells. You're making money in 60 days. And guess what? You're going to be happy as a clam because guess what? There's no risk. It's cash flowing. Start making money and you go back to the beach and have fun and have a Mai Tai.
I know you said you were looking for larger investors, and I just want to say to our club here that with the Alternative Investing Club Fund, we are looking to make an investment in energy, and Eckard Enterprises is going to be the one of the ones that I'm going to be doing due diligence on. Very promising looking one. And so if you want to pool your funds and bring them in there, I'm going to be evaluating that. Just contact me and let me know if you're interested in that. And if you want to invest directly with Troy, contact him.
Yep.
Um, let's see. There's a question here about will you share your slides with the group?
Oh, absolutely. Yeah, I'll
Yeah.
send it to you and you can have all the slides. Also, folks, just keep in mind, I love to educate. If you want to go onto our Eckert Insights, You're going to find thousands of hours. In fact, my biggest complaint from my partners is we get 3 to 5 educational videos a day from you. We don't know how you do it, but some people just go, I got to block him. I've heard 500 videos. I can't do anymore, right? But I see it this way. I'm going to give you more information than you'll ever need, but I do it because I want you to be smart and educated. So I'll send you these slides. We'll put you on the online. I want you comfortable. I want you to do what's best for you. And if you don't invest in me, no big deal. If you just want to have information, that's great. I want you to do what's best for you.
Rajesh here has a question that I think actually is going to illustrate a key point here, because I think there's a little bit of a misunderstanding. But his question is, if we invest with Eckard, is there a minimum lock-in period?
Well, you're owning an asset. It's like buying a piece of real estate. There's no time frame. It's your asset. So let's just say you bought $500,000 worth of minerals the next 24 months. You go, I found out I have cancer. I'm getting a divorce. I want to buy a lake house. Well, the other thing that we did that no one else in alternative space has done, we created our own online market called P2P, partner to partner. When you're a member of our client base, you can take a mineral package, you can list it on the P2P, and the other 3,000 partners buy your minerals. We've been doing that for 3 years. We're the only one that created the market. We make no money.
That's very cool.
A $250 paper transaction fee, and you guys buy and sell. We can't buy on the market because our lawyers say it'd be disadvantageous. We'd have a higher knowledge than you do. But our clients are buying each other all day long, every day. We've had deaths, we've had cancer, we've had divorces. So we're the only alternative asset that offers that kind of P2P like that online.
I hope most of them are for lake houses and not the other things.
We hope so. We hope so for sure.
All right. Hey, could everybody here take themselves off of mute and thank Troy for coming in and speaking to us today?
Thank you.
Thank you, Troy.
Thank you, Troy. Very good.
I hope we can help you. Ask me anytime and call that cell number if you want to help. Daniel, thanks for hosting and having me on. We look forward to future conversation with your group.
Thank you very much, Troy.
All right. We'll see you guys. Take care.
Have a wonderful weekend, everybody. We'll be back here next week.